Hi, everybody. We're gonna get started in just a minute. Oh, stop the dance music, Francisco. Come on. I like the new electronic sound.
There it is. It's coming back.
Thanks so much. All right, it's 11. Welcome to Wealth Press Roundtable Live. I'm Laura Cadden. I'm with the Wealth Press editorial team. Today and Francisco is manning our chats and all the technical aspects. There he is. Hi,
Hey,
Francisco.
Hey, Francis.
So Roger was supposed to be with us today, but he had to cancel today because he has so many big things happening, especially at noon. He's doing an open house on his trading room. I'll tell you all more about that in just a minute. But we do have with us our own Jeff Zananeri, our market expert with us, and Celeste Lindman is back. Hey, Celeste, good to see you.
Hey, good to be here with everyone.
So good to have you guys.
Hi, Laura.
Always a pleasure. So there's lots to talk about today. I got all these numbers coming in, so we'll jump right in. So the CPI came in lower than expected, and the S&P 100 and 500, all the indexes jumped high at the open, but then they started moving lower immediately after. Why couldn't the market hold the gains if peak inflation is really behind us, as some people believe? What do you think, Jeff?
Well, people don't know whether peak inflation is behind us, but more importantly, I think the market is starting to move on from the inflation story and starting to look more at the real economy, what earnings are going to be, and the real impact of a slowdown that's imminent. So we moved past this Fed thing. I think we're resigned to the fact that the Fed's going to do a little bit more, and then they're going to kind of exit the scene for a little while and keep rates high. The problem is how much damage has already happened, how much of the pain that Jay Powell was talking about being inflicted is already starting to get digested by the biggest companies in the world. We're seeing massive layoffs across the board. So I just think usually what happens is the market shifts its attention before the media or like mainstream traders do. One of the tricks, one of the rubs of this thing is understanding when the wind has changed and something that used to matter so much doesn't quite matter as much as it used to. So the knee-jerk reaction was one that everyone started to kind of expect. And when everyone starts to expect something and really focus on it, that's when it stops mattering.
Would you agree, Celeste?
I think that's very well said. Moving on beyond the inflation headlines. But really what we saw, I think, is that first reaction. And I think we're going to see it again today with the Fed news. We'll talk about that later. But you get this first reaction, and it was before the cash market opened, and this jump up. And then when the cash market opens, that continues. And then the kind of digesting of the news. And Jeff's right. I mean, like the inflation thing is like that. It's like a ship, big ship. It takes a while for that to all turn around. And there are a lot of things, going on in the economy. But the other thing too is that there are massive layoffs, but there are other companies that can't find the skilled labor that they need. And so you kind of got, a tale of two markets going on as well, or, in that economy as well. One thing that I thought was interesting too is that the VIX, it stayed down while the S&P, went up and came down. That VIX stayed down. And I noticed this morning, last time I looked at it, it was down a little bit on that as well. And so that's interesting to me. And I know Jeff's a real expert on VIX, so it'd be great to hear kind of his analysis on that. But the other thing that I did that I think a lot of people were doing too is, taking that as a gift and profit taking. And so there were a lot of positions that I was long on that I took advantage of that and took that profit, as I watched that, because you're educated and that you kind of expect that knee-jerk reaction. So that's kind of my take on what happened yesterday.
What do you think happened with the VIX, Jeff? Why didn't it react?
Well, first, I just want to expand on something that Celeste just said, which I think is really, really like a salient and important point. She took it as a gift, and Celeste is an awesome trader, and she thinks in advance, and she games these catalysts like we're all trying to do. The thing is, when you have an entire society of investors and traders that are like, I wish I could just get out a little bit higher of this thing. I don't want it, but I want a little bit more money for it. I don't want it on my books. I'm sick of looking at this damn stock. But if you could just give me 5% more, yours. It's yours. So as long as that is kind of the mass psychology of the market, I think we're going to have a little bit of a resistance, an overhang. a wet blanket, some people call it, on stocks going significantly higher. A little bit later on in this presentation, I want to share my screen and go over some technical levels, et cetera, for the broader market because we have the Fed coming later. Short comment on the VIX. The VIX is so busted. I know, like, I used to look at it religiously, but this is a very important lesson for people. When something breaks and doesn't work like it's supposed to, the best thing you can do is to stop looking at it because it's just going to drive you nuts and it's going to cost you money. And the VIX index has been manipulated. It's broken. It doesn't really reflect what the market's doing on any level. It's become just a derivative of a derivative. It's something that's being completely mass manipulated. And to short answer is VIX should be much higher than it is based on having a 4% fade in the market yesterday. Like, you never see that happen. I think it's like a 3 standard deviation event. For the non-math geeks out there, extremely rare is what I'm trying to say. And for the VIX to barely nudge higher means that it's not doing what it's supposed to do.
Brilliant.
Well, let's move on to the Fed announcement. 2 p.m. today. Is there room for a surprise in a market move? What do you think? Celeste, you want to start us off?
Sure, I'll start off. I think there's always room for, surprises. We don't really know what the Fed is going to say until the Fed says it, though we try to predict it and do so with pretty good accuracy, like thinking what the Fed will come out with today. So there's always room for surprise, but there's always a way to look at it. And it's really the same way kind of as the CPI news that comes out pre-market, but the Fed news always comes out during the cash market. And that's always interesting to watch too, because you've got a lot of players that are in the market right then and there. So you generally see a big movement. So you're going to get your first reaction, just like we had the first reaction to the CPI. And then you're going to get your second reaction that's going to come, as they read the report, as they listen to the conference, and as they respond accordingly. So again, it's just like, what that range is going to be and how I'm really watching to see how that's going to play out against the CPI news of yesterday. As they digest the news, throughout the afternoon, are they going to go, retest some of those highs that were made yesterday, or are they going to make that big low? We're at such a pivotal point in the market right now. I mean, it's like there's almost as much evidence for it to go up as there is for it to go down, technically speaking. And so I think today is going to be a real key day to watch.
What do you have to add to that, Jeff?
I have a lot to add. That was great, Celeste, but I'm going to share my screen. I want to show you guys some stuff that I'm looking at, if you guys don't mind, if you'll indulge me.
Do it.
We've got what I'm showing you right here is what the anticipated Fed funds rate is going to be in May of 2023. So basically 6 months out from now. Today, we're still around 4%, but we're expecting another 81 basis points. So give or take, we got 50 coming today. Now, the question is it going to be another 50 on top of that, or is it going to be 25? That's the big debate that people are having. So is Jay Powell going to give us some clues? I don't know. He might. One thing I was looking at was the GDP. If you look at the real GDP down here, we have this year, which was barely any growth. So like, this is why there's such a raging debate, recession on recession. Well, we went from this, which was totally artificial, to this. So technically speaking, this was a recession from that, right? We had down quarters to get to that. But we're expecting to grow in 2023 from this crap year. But look at this unemployment rate, what it's supposed to do in 2023. It's supposed to explode to the upside, which should be good for inflation. The problem is when this starts happening, people are going to stop spending. The economy is going to get worse. Stocks are going to have worse earnings. Stock prices are going to reflect worse earnings. So it becomes kind of a vicious cycle. What I'm trying to say is we're going to have 50 basis points, but what he says next, are we going to be stopping around another 25, another 50? Can we go much higher than 5%, which is what the terminal rate is? That is going to be what drives all kinds of action. One last comment I want to make on the Fed is, have you guys been seeing the screen that I was showing?
Yes.
Yes.
Okay. So one last comment I want to make is one of my least favorite days to trade is actually right as the Fed is announcing, because there's so much, unless you're trading in like 45-second to like 5-minute increments, which I kind of do. I'll scalp really small size around just to play around with the market. It's cool. But otherwise, you get so many what we call head fakes and post Fed. And I know lots of pros that don't even like, they take the day off because the real move, the move that's going to have some legs, typically starts the next day. Tomorrow is going to be an unbelievable trading day for me. There's different strategies, different type of people. So Thursday, Friday, going into the end of the year, going to be unbelievable opportunities. This afternoon might be a little bit of a chop shop. I'd be careful. And it's mainly because there's no visibility as to how high they're going to go. And the reason there's no visibility is because these dudes don't know what they want to do. They don't know. They don't have a plan. They're winging it. You know, when you're a little kid, I mean, I have children. And so, I mean, small children. And so I'm kind of like, it always throws me back into this, like this state of the childlike minds where they look at adults as having all the answers. And sometimes I have adults that tell my kids some stuff that I don't believe to be true. And so I'll tell my kid, I'll say, so what do you think so-and-so, your teacher, knows about X, Y, and Z? What does your gym teacher know about economics? And then they'll say, well, I don't know. It's an adult. Right. And so that's how we think of the Fed. We think of the Fed as the adult in the room and they have some master plan and they have all the answers. They don't have a master plan. They don't have an answer. They didn't even know that that inflation wasn't going to stop going up about 8 months ago. They were like, oh, this is peak CPI at 6%. And then we did another 2.5% on top of that. So these guys don't have a clue. Market's going to price in their insanity and their lack of visibility. I think, and I'll go through the technicals later, that there's a hard cap on the upside in the short run and how much stocks can run higher. I'm nervous for the downside for growth, but I'll explain it to y'all later.
Very intriguing. So speaking of this week too, we also have monthly options expiring on the 16th. So that's on Friday. Are there interesting flows? Jeff, I know you follow money flows. Is there something that you're seeing?
You know, oddly enough, flows are so bad. That's another reason you can have a 4% move from 9:30 cash open, as Celeste was talking about, till noon, till lunch. When you don't have real flow, you get more crazy, wild moves on no liquidity. So the volume is really bad. And I was talking to Lance about this offline. We talked like during the day about trades a lot. And Lance was like, I'm seeing just like a lot of complacency. I'm seeing not like a lot of convincing flows, like big money going to work. And I look at stocks really closely for my flows because my background is institutional trading. And so all the real big boys, the big money is in cash equities. It's not as much as in options. Options are like a reflection of that. And it feels like everybody's already like on an early vacation, so to speak. I expect the last week post-Christmas to have some fireworks because it was a big bearish year and there's going to be some cleaning of books to do. But I think that in between now and the last couple of days of the year might be surprisingly like non-committal. You might just get a lot of this.
How about you, Celeste? What do you think?
I think Jeff has said a lot of really great things. I haven't talked to Jeff, but one of the thoughts that I've had in my own mind is looking at this market is that the professionals are on vacation and that there's not that huge participation. And, we've traded a lot of Decembers. So we've seen a lot of these things and it just has that feeling to me this year. So it was interesting to hear that, that Jeff and Lance were, talking about some of those things as well. The other thing I think too, I wanted to say, just to piggyback on a couple of things that Jeff had said earlier. And this is one thing, I can't wait to watch the recording because I think that was some really doggone good analysis that Jeff showed on the screen and worthy of taking note of. So, and the other thing that I really like that Jeff said is really, teaching your kids to think, thinking ourselves, thinking as adults. Yeah. And that is so key, don't just, it's so important not to listen to the talking heads and the headlines, but to really go and look at these things with that critical eye and that critical thinking. And I'm so excited to be part of, Wealth Press and around some really great traders who help train my brain to think correctly. And that's what I want to encourage everybody else to do as well, as think correctly.
You help us to think correctly. You have clear eyes. And you're an independent thinker. So that's important. I mean, that's not just important for kids, but it's very important for market participants to always have their own conviction. This is the thing. If you don't believe in your heart and your mind that what you're doing is going to make you money, you're going to not make money. You're going to lose because the first exit off the highway, you're going to take that exit. And if you start making a little bit of money, you're not going to believe it's going to continue to go. And if it starts losing, you're not going to have a plan for that either because you're not going to really know why you got into it in the first place. So independent thinking. I didn't mean to interrupt you on that,
You're good.
Celeste. It was such a teachable moment in light of like how hard this market is, that you should only do things. And like even like in our world, like we have some experts, like I sit down with Roger, I'll sit down with somebody who has more market T-Buzz. I'm
Yep.
always awed by T-Buzz, who's bringing up like Jimmy Carter references to me and like Ronald Reagan. I mean, I love those presidents, but I was a child when those guys were around. So I'm learning from people all the time, but I'm also examining their philosophy and their strategies for my own prism, as Celeste does too. And I implore you all out there to do the same thing.
Exactly. Well said. Then to answer your question too, Laura, about the options, I haven't noticed a lot, but one thing that does come to my mind every time we come around to this options expiration, and just taking a quick eyeball, I notice it kind of has the same kind of pattern setting up right now, is that kind of downtrend the last several days before options expiration. You can just take your eyeball across, last couple of years or any time frame and kind of see that it generally kind of has that pattern. And that also, puts a little bit of downward pressure on the market right now as well.
Oh, good observation. So let's move on to the Dow. The Dow is above the 200-day moving average, while NASDAQ and S&P 500 are below. Could this be the start of a blue chip bull market? Celeste, you want to start us? What do you think?
Ooh, I can't wait. Actually, I didn't know this. I didn't realize this until looking at things this morning, but the S&P futures is actually above the 200-day moving average. It closed yesterday above the 200-day moving average, actually for the second time, in the past couple of weeks. And it actually, it hit its head kind of a couple of times against that 200-day moving average. It's just kind of interesting little tidbit. Again, just kind of thinking for yourself. Don't go, by the moon or anything, but that's interesting. So do I think it's a time to, jump in on the blue chips? I would say no. I think personally, I think it's still this stock pickers market. And I think Jeff, Zenanar, I think you've said this multiple times. It's stock picking. That's what I'm thinking. I think it's sector picking. When you look at the Dow, I mean, it's looking at the Dow, the components of the 30 stocks, it's not just energy that's pulling that baby up. And that's why you need to think for yourself as well. Go look at that, go see the stocks that are up and ask yourselves why. And are those tradable, kind of more bullish kind of place? But there are plenty of stocks on the Dow blue chips that are dogs. And I would not touch. I would short, but I wouldn't go long. So I don't feel like it's, go all in. I manage, my 401k, my husband's 401k, help some people out with that. And, so that again is a big ship. You can't just jump around, and you don't have a lot to select from, but you do have things like, growth or, value or blue chip or, emerging markets kind of things. And so you kind of have to gauge it a little bit that way, but it's not like I'm ready to go all long blue chips on my 401k, put it that way. Okay. But selectively picking, yes. I love what's going on with this kind of analysis that we've talked about over the, days and weeks and months, like we've had some lows that happened in June, July, that stocks that are still trading way above that. We have stocks that made this low, here just recently, September, October. We're going to be watching, hey, are they going to make a new low? As we move into that area of the second quarter and we move into January and we move into March, and we have what might be, another pullback, another kind of scary event. How will those blue chips, all of those blue chips in the stock respond to that? I think that will be key and something to watch.
You agree, Jeff?
Let me share my screen. Let's look at the data. You don't mind, do you?
Go
Love
for
it.
All right. So we were talking about the S&P here. Let me first look at the S&P that Celeste was just saying, and she's correct, 100% correct. Closed above yesterday. The 200-day moving average here, which was 40.32. So I'm looking at the cash S&P, not the future. Right now, it's trading right around it. It's a little bit above it, like give or take 30 basis points above it. But we know that there's going to be a massive move this afternoon. There's going to be a massive, result that's going to be more than 1% one way or the other. Whenever you see the bar chart stuck in between two of the moving averages, this is a very strong consolidation pattern. What do I mean by consolidation? I mean that we're basically going sideways, right? Like you can see that with your own eyes. And this is getting more and more narrow. But the thing is, once you exit a consolidation pattern, you go hard in one direction or another, depending on which way you're exiting it. So if we get a decisive move above like 4,100, 4,200, then for me, the odds that we can go back to 43.26, which was the summer high, is incredibly high. If we break down below this range, then you're going to look at much more downside. So I'm looking at it from the standpoint that we're consolidating. It's about a 50-50, as Celeste was saying, whether we go higher or lower at this point. But the thing to me that makes the downside more interesting in the shortest of runs is that there's a lot more space, as you can see here on the downside, than where the upside really presents itself to be in the shortest of runs. If we look at the NASDAQ, which has got an entirely different look to it, much more bearish one. Come on, Bloomberg. Bloomberg, don't fail me now. All right. This one is also consolidating, but seems decisively more bearish as it's below not only the 200-day, but it's also below the 100-day moving average here, right? So NASDAQ looks worse. S&P looks okay. Dow looks the best. I don't trade the Dow Jones because there's no futures on it, and it's like a very arbitrary group of stocks, which we're going to look at here in 1 second. I want to look underneath the hood at this thing, but this is by far the most bullish chart of the major indices. And so if we look at why is this thing so bullish, don't you guys just love how I can go through this this Bloomberg like a piano? We've got, look at, these are the best and the worst of the Dow Jones this year, because we're talking about the dogs of the Dow versus the best of the Dow. So we've got Chevron, we've got Merck, obviously, that's still riding on like the whole pharma thing with COVID, et cetera. We have more biotechs. Caterpillar is an interesting one because it's an industrial stock. Honeywell, obviously a conglomerate that has exposure to US contracts. But if you look down here, Disney is a surprise dog. What do you do with Disney? I don't buy it yet. I think Disney still got a host of problems. You got Salesforce.com, which was one of my shorts on monthly money flows as the worst stock in the Dow. But if you look at the worst stock in the NASDAQ, which we're about to, it's down a lot more than the worst stock in the Dow. Check this out. Lucid, down 80%. Almost on the year. Lucid was one of my shorts in MoneyLink. So I think you guys get the idea. I like to short the real terrible stuff. And if and when I can go long bullish stuff that suits my eye, I do that too. But to be a counter, like cyclical person right now is probably a dangerous, dangerous way to play the stock market in the shortest of runs. But that's what I wanted to share.
Murray just put into the chat that Merck and Moderna had an article. There was an article about
I
a
saw
cancer
that.
breakthrough.
I saw the interview yesterday of the CEO of Moderna. It was really interesting.
Yeah. And I was just going to jump in too, I think pharma's still riding COVID things, but I'm very bullish on healthcare because I personally think it's the new technology. That's where all the breakthroughs are happening. And I know just from some personal experience in my own state of Indiana, central Indiana, all the things that are going on there. And so I'm watching them very closely. I've been trading them quite a bit this year as well. And so keep an eye on that too. And yeah, Murray, I was noticing that as well. It's good stuff.
I'm going to share that with everyone, the article that Murray just sent us, because that's really interesting. To jump to December's and Santa Claus rallies. So I was doing some research on that. And of course, December 15th through about January 7th to 11th has historically been one of the most bullish periods in any year, up about 70% of the time since 1885. Then I found a Forbes article, though, that reported yesterday that the Santa Claus rally this year could be exceptional due to the occurrence of something called Dewey cycle. For those who don't know, as I didn't until I read this article, I'll paraphrase. Edward Dewey noted an oddity in stock prices that could only occur between December 20th and January 20th. He was seeking a way to add value to the usual seasonal strength, especially the Santa Claus rally. He discovered that about once every 2 or 3 years, there was an exceptional strength in the time period. Applying his barometer, the likelihood of a market bump from December 15th, tomorrow, to January 7th is as high as 84%. What do you think? Will it happen this year? Did you guys know about this Dewey cycle? Jeff, you want to start us?
I think Dewey needs to stick to the decimal system personally. I'd like to know how many of those years how many of those years in the 84% was the market down double digits? Because I think that truly affects how pronounced the Santa Claus effect is. I, for one, think the Santa Claus rally is going to be disappointing this year. And I think because of the fact that the phenomenon that makes a Santa Claus, the conditions that make a Santa Claus rally exist, are based on how well on good stocks doing great at the year end. And there's not a lot of good stocks to make look even better. It's like taking a supermodel and giving her the best clothing, right? That's what happens in the most amazing Santa Claus rally situations. But you're not going to take Miss Piggy and have her win Miss Universe in 2022 just because Mr. Dewey has his study till 18. I'm sorry, I'm selling it. I'm selling it. I'm selling it, Laura. I'm sorry. It's interesting, but I'm selling it.
What do you think, Celeste? Do you think there's hope?
Well, yeah, I think it's an interesting setup, and I'll explain it. But I think you really need to listen to what Jeff said and heed what he said, because what he's explaining is how a Santa Claus rally happens. And so if you're not seeing the support for that, will it happen? And that's very key. So listen to those words and apply them. I'm going to come out, I am a seasonal trader and a cyclical trader from a longer term perspective, for sure. That has really helped me have a lot of success. That I think the key is what people need to understand about any kind of seasonal trading or cyclical trading is that it's not the peaks and the valleys, the magnitude, it's the twists and the turns. And one thing that we looked at early at the beginning of the month is, looking at the data for, the month of December, how the month of December played out when you had a bearish year. And the data came in that it would be slightly higher from the month open. Okay. So the month opens December, a certain number, and then it's going to close based on the environment that we're currently in, slightly higher. Now, under bullish years, it would typically close higher, quite a bit higher, a good, Santa Claus rally. It showed also, the pullback, the first couple of weeks. And I'd say we're definitely experiencing that pullback in the first couple of weeks, and then, pivoting to that higher end Santa Claus rally kind of thing. So it's something to watch, but it's not something to go put all your money on, just keep it in mind as you're trading. And, it's like, you got to stay nimble. Whether you're, right now I'm trading to the upside and to the downside. Is not typical of most Decembers, but in this environment, that's what I'm doing. You got to stay nimble. You got to be open-minded. You've got to avoid any bias, and you really got to trade by your rules to the upside and to the downside. And you got to be good. And this is a good lesson for any type of trading, but particularly in this market, you got to be good with, saying that you're wrong. I'm wrong. I got to get out. I have these rules. They say get out. And so playing by that will help you, whether there's a Santa Claus rally or not, because I liked what your study was saying too, though, Laura. It really made me think. And I want to approach it, and I want to listen to it, and I want to watch it. The thing that comes to my mind too is January. I have traded actually I haven't, I tend to stay out of a lot of Januaries, at least the first couple of weeks, because I really want to see what the market's going to do, because I've been in enough Januaries to know that there's enough scary times that come. It's like everybody's thinking about the year open, and how we're going to do this year. And it gets a little bit dicey. So watching that. But before I shut up here in a second, what I want to say is about that month open of December is that's another key number that we're trading at right now. If you look at the month open, of course, I was looking at the futures earlier, S&P futures, month open, and where we are right now, we're just right about at that month open. So I just pay attention to it and trade accordingly.
Anything further to add, Jeff?
Yeah, keep your inventory fresh and be careful. I mean, a new year is always an opportunity to start fresh. Just like people like to go to the gym, they buy a gym membership, they go for about half an hour. They do one class, they do like 3 bench press, and then they're out. They're back to eating bonbons on the couch and watching Sally, Jesse, Raphael. That was a joke for the older people in the crowd. She doesn't have a show anymore. But I think that the market is going to be surprisingly bearish to close the year. I think it's going to be surprisingly bearish to open 2023. And I think we're going to bottom out sometime around the end of Q1. Now, I'm open to changing my mind completely, but we've had a whole host of things that would make, like, where is Santa? When's he coming? I mean, we've got CPIs calming down. We've got, that's out of the way. We've got like the Russia war thing is starting to take a turn for the better for the Ukrainians. We've got oil making new lows. You've got all these things that are saying like condition, Santa, I'm waiting for you where you're at, dude. And he's, no sign. So sold. I'm so cynical. I wish the child in me was still alive, but I'm dead inside. I'm sorry, ladies.
Well, we enjoy your cynicism. Thank you so much for joining us today. I really
was a lot of
appreciate it,
fun.
Jeff. As always, it's a great
lot of
pleasure.
fun.
Celeste, an absolute delight having you as always. I'd love to hear your words of advice. And we're going to have Celeste back next week, actually. So that's a great joy for us. For those of you who don't know, Roger is doing a special session in his VIP trade room today. It's an open house. So you can join us today. I think Francisco can put a link in there for us. There it is. It's totally free to join him. It's about preparing before the Fed announcement, kind of the things you need to know. He's going to have a guest, Chuck Hughes, join him. So please come to join us today in Roger's trading room. And everyone's saying in the comments, it was a great session today. Thank you both so much. And we hope to see you in the trading room for Roger in 30 minutes, by the way. He starts at 12 noon. So
Hey,
please
by the
join
way, I
us
was just
there.
going to say, yeah, that is a really phenomenal show to watch with Chuck and Roger together. And I was looking at one of the indicators that Chuck has right now. I was looking at that earlier this morning, and boy, it was populating some stocks that I was very interested in. So I'm just curious to see if they'll mention those and see how good my analysis is. Well, I'm going to check it out.
I'm
So I'll see you
sure
all there.
they will. Again, thank you all so much. Thank everyone. Have a great week.
Have a great
Peace
weekend.
out,
Guys,
all.
thank you very much, ladies. Bye-bye.
See you next
Bye.
time.
See y'all next week. Bye-bye.
Before I close down the room, go ahead and either save that link or just click over. I'm going to be the one opening the VIP trade room for the open house. So as soon as I close this room, I'll be opening the other. So see everyone soon. I'm going to drop the link one more time so you can either save it or just go ahead and click over. It's going to be a good one with Roger and Chuck Hughes. Official start time is at 12 Eastern, but we'll be opening the room right now. So it'll start in the next 30 minutes. All right, everyone. See you in there. Take care.